Hi everyone, this is a quick review how the Chinese EV market is doing. This is based on latest data for July. Market grew 25% year over year to 556,000 vehicles. And year to date, so after the first 7 months, the market is up almost 33% to 3.6 million vehicles. You can see last year, after July, the market saw some significant expansion, but that was driven by launch of additional incentives. So although I do expect a significant sequential increase in August, it will likely not be as large as last year in percentage terms. So this next slide shows you the market in terms of revenue generated with electric vehicle sales. So revenue grew significantly slower than volume. Market is up 14% in terms of revenue, and in July the EV market generated 11.3 billion with EV sales. Last year we were at 9.9 billion. But you can see that when you look at these year-on-year revenue growth numbers, we do see some slowing in revenue growth, which is not immediately visible when you look at the volume growth. So at this on this next slide, you look at the number of electric vehicles sold new. I'm sorry, I meant the number of models sold new. And in July, the number was 214, so that a Chinese customer could choose from 214 different models. This is a significant reduction from the last month's June, where the total number reached a new all-time high of 232 vehicles. So this might be an early sign of the market starting to normalize, because the Chinese EV market really became too overheated. There are too many models. Since when you look at model by model in terms of revenue generated, most models simply generate too little revenue to justify their existence. So then this next slide shows you the average revenue per electric vehicle sold in China. And in July, that number was $20,300. And that number came down year over year by 9%. And when you look up here, you can see that for the last 9 consecutive months, the average electric vehicle selling price has been decreasing. And what stands out is not only the length of the sequential, or I should say year-on-year decrease, but also the magnitude. You can see that for the last 5 consecutive months or 6 consecutive months, the decline was 9 or 10%, or in one case even 12%. And this is not only explained by changes in mix, i.e. the sale of more lower cost vehicles, but is significantly driven by ongoing price wars, which creates a scenario where the Chinese automakers especially launch brand new vehicles at very low prices. What used to happen was then when companies launch new vehicles, they often try to exploit, at least in the first couple of months, a high propensity to pay from the consumer. But due to the very high competition, this practice has by now long been abandoned. Next, let's look who is selling the most vehicles, the most electric vehicles in China. So number 1 is BYD, and the metric you're looking at is a trailing 3 months metric. That is the most meaningful number because it corrects for some inter-quarter seasonality. It makes these vehicle maker more comparable. For example, if you did this analysis on a monthly metric, Tesla would bounce up and down all the time because Tesla has a different delivery strategy compared to most of the Chinese vehicle makers. So that's why if you want to compare all the key players, you need to use a 3 months metric. So based on this metric, BYD is number 1 at 433,000 vehicles sold. No one is even close to that number. The number 2 is Geely. Geely sold 272,000 vehicles over the last 3 months. Number 3 is the SAIC General Motors joint venture. They sold 171,000 vehicles. And Tesla comes in at number 4, selling 141,000 vehicles. XPeng is number 5, selling 93,000 vehicles. And Xiaomi is number 6 at 84,000 vehicles before material volume of the SU7, their new SUV product, kick in. I apologize, not the SU7, it's the YU7. But this kind of ranking in terms of vehicle volume is not that meaningful, because what is much more meaningful is revenue. And this is what this chart shows you. Here, BYD is still number 1, generating over the last 3 months 7.8 billion with electric vehicle sales in China. I'd like to point out this is only fully electric vehicles, battery electric vehicles, or BEVs for short, but does not include BYD's hybrid products. Most of BYD's vehicle sales in China actually are hybrid vehicles. But this analysis focused on the fully electric vehicle segment, because long term I believe China will be moving to fully electric, and the strong sales we see currently for hybrid vehicles, especially EREV variants of hybrid vehicles. EREVs are extended range electric vehicles, which is a type of hybrid vehicle, but with a very long fully electric range. So when we look at this analysis, you can see that now Tesla moved from number 4 in volume to number 2, generating 5.5 billion in fully electric vehicle sales. Geely comes in at number 3, 4.6 billion. And please take note, Xiaomi is already number 4 at 2.9 billion, beating even XPeng, which comes in at 2.7 billion. And also creating a meaningful gap to NIO. NIO generated 2.2 billion. And also note, when you look at NIO's trend, which is this purple line, NIO has been stuck at the, let's call it, 2.2, 2.5 billion mark for quite some time on a trailing 3 months basis. And then outside of the top 6, the revenue generation drops off quite significantly. And also, please note, SAIC, GM joint venture, only generated 1.6 billion, even though, if we jump back real quick to this analysis, even though this joint venture sells more vehicles than Tesla, their revenue doesn't even amount to 1/3 of Tesla's. That already tells you that their vehicle portfolio must be completely different, i.e. must be very low cost, and this is the case. Most of the SAIC GM volume comprises vehicles that sell at sometimes $6,000, $7,000, $8,000, while the cheapest Tesla in China costs at least 4x. And for that reason, I always point out that looking at volumes is actually, from an investor's perspective, quite a dumb metric, because volume does not directly generate earnings. Revenue does. Revenue and margin. And let me give you maybe a silly sounding example. Imagine you have a country where total revenue for vehicles is 10 billion. And let's say almost all cars are sold super cheaply, and all these super cheap cars generate 1 billion in revenue together. So the remainder of this 10 billion market, 9 billion, is generated by selling this one absolutely amazing vehicle, ultra uber expensive. So the automaker that makes that absolutely amazing super expensive vehicle generates 9 times more revenue than all the automakers selling all these other cheap cars. So who you want to be? You want to be one of these other automakers selling a lot of cheap volume, or you want to be the one who sells that one amazing car? Of course, you want to be the one who sells the one amazing car, because you're taking in 9 billion in revenue while the rest is basically fighting for scraps. Of course, this is a kind of silly example, but it makes the mathematical principle very clear. And something very similar we saw unfold in the smartphone market, where Apple actually sold a fairly low number in terms of units. But then when you look at the value capture of Apple, it's a multiple of the unit market share. So the rough numbers are roughly, Apple sold about 20% of smartphones, but captured about 80% of the value. Because one, Apple phones are a lot more expensive than the average smartphone, ex-Apple. And number 2, Apple makes on each dollar of revenue a lot more margin. And that's why each Apple phone sale had a financial leverage of 6-10 times of other smartphone makers. So next, let's look at the market share in terms of revenue, which is, again, 100x more meaningful than looking at just volume. BYD is number 1, taking 22.1% of total EV revenue home. Tesla number 2, taking home 15.6%. Geely number 3, taking home 13%. Xiaomi 8.2%. XPeng 7.5%. NIO 6.3%. And then SAIC, General Motors 4.5%. So if you look closely at this chart, you can see, of course, Tesla's trend is fairly consistently downward. So you might wonder, okay, why is that? While the others like BYD kept pretty much its market share, if you look across this trend line, Geely managed to increase its market share, but has been also a little bit steady for the last couple of months. And the answer lies on the next chart. So this chart now shows you the number of models offered by each group, BYD offers 29 models, and you can see there has been a significant expansion. So basically, BYD maintained its market share not by selling more of its existing models. No, they just kept throwing more and more models at the market, and that only helped them to maintain their market share. This is a very expensive way to maintain market share, because it also means that your old product portfolio is constantly losing market share. But the loss in market share in BYD's case in terms of revenue was compensated by adding all the time new vehicles. And then the other one that increased market share but also has been flat for some time is Geely. Here the same pattern. Geely also significantly increased the number of vehicles on offer. So a similar pattern applies. Their existing portfolio lost market share, and only by adding new models they were able to actually expand their market share. But again, this market share expansion also stalled for a couple of months. And when you look closely, this market share stalling in Geely overlaps with Geely not further expanding its product portfolio. So when you look at this light blue trend line for Geely and look back at the revenue market share line here in this darker blue color, you can see here market share expanded and then kind of stopped, and now now Geely is losing market share. And this is exactly in line with the product portfolio expansion, stagnation, and then reduction. This also means, so BYD and Geely are in the same boat. Their massive market share expansion, yada yada yada, all driven by just throwing more and more vehicles at the market. But this again is an extremely expensive way to do it, and is not sustainable because it depletes the company of cash reserves. Since the result is always the same, it's negative free cash flow. And there are only then two ways to make up for it. One is raising equity, or issuing equity, I should say, or issuing debt. Issuing debt, there's a limit to it, of course. And raising equity is also not good because it dilutes the shareholder. But then there's a third one that actually these companies used, and they actually made the supplier finance the growth by expanding the number of days by when the supplier was paid. So they used a form of off-balance sheet financing, but this is an unsustainable way of doing things, because the longer this goes on, the higher the risk of suppliers actually going bankrupt. So anyways, when you look at this chart showing you the different the number of models, the two significant outliers are Tesla and Xiaomi. They are the outliers because they rank quite well in terms of revenue market share. So if you look back at this chart, Tesla number 2, 50.6%, and Xiaomi 8.6%. But both companies only sell two vehicles. Some people now might chart in front of the screen say, oh, but Tesla is selling the S and X. This analysis only focuses on domestically produced vehicles because they account for 99% of the market. Yes, Tesla sells S and X in China, but the numbers are minuscule, and that's why not even worth considering. But to really understand automakers' competitiveness, we need to understand how their products compare. So it's not only the total group, because we already learned we can't look at volume because volume depends on what price point you sell. So we need to look at revenue. But then revenue is also not sufficient because an automaker can't just throw tons of models at the problem. So we need to understand, okay, who is actually selling the most competitive products. And this is what this chart does. It compares the revenue generated, again, not volume because volume is not that useful, revenue generated in the last 3 months by model. And here you can see that Tesla is selling the best-selling product in China. Tesla generated 4 billion in revenue over the last 3 months with the Model Y. Nothing on the market is even close. The number 2 is the Xiaomi SU7, which is a vehicle that's comparable to the Model 3. That model took home 2.6 billion in revenue. And then number 3, Tesla's Model 3, taking home 1.5 billion in revenue. A little side note, Tesla just launched the Model 3 Plus. I expect that model to reverse the trend that you see currently. So the trend over the last couple of months has been that revenue came down on the Model 3. So it's good to see that Tesla did some product line refresh here. Then number 4 most revenue generating vehicle was the Geely Star Wish. It's a very low cost vehicle, which was actually, by the way, in July the best selling electric vehicle in China. And then BYD, so BYD's best performing vehicle, the Seagull, in quotation marks, only generated 890 million, which means it's it's nowhere close to any of Tesla's products. So Tesla generates over 4x the revenue with the Model Y, and even the Tesla Model 3 generates a little less than 2 times. And that is BYD's most revenue generating product. But then, and now it gets a little harder to read because it's smaller font, but then when you look further down the list, BYD then has the 7th best-selling product, the 8th best-selling product, the 9th best-selling product, the 10th best-selling product. So BYD does it by just throwing tons of models at the market. Some do okay-ish, but the vast majority is highly underperforming. And that's why BYD is not generating cash from its large electric vehicle business in China. And this is precisely why they had to raise all-time high in the first quarter of this year. And then on this last slide of this analysis, we look at the revenue market share by model. So the ranking, of course, is the same, but let's look at it in relative basis. So Tesla Model Y takes home 11.3% of total EV sales revenue in China. Let me repeat it, 11.3%. So $11 of every $100 spent in China on electric vehicles goes to the Model Y. And then another $4.3 of every $100 spent goes to the Tesla Model 3. And BYD's best performing vehicle, the Seagull, only takes home 2.5%, so $2.5 for every $100 spent. But the other key observation is that you have a ton of other vehicles that then quickly drop below 2% market share. And I didn't even bother attaching here labels because frankly it doesn't really matter. You can see here in the ranking down here these players. So you can find a ton of BYD models here. Also, when you look through this list, for example, the first Neo model, you have to go to 18th place, which is the Neo ES6. Neo is also a player that tries to use a throw and see what sticks strategy. Has for its size a relatively large product portfolio, even by Chinese standards, and is also a big driver why NIO is not generating free cash flow. And this is why NIO's next capital raise is just few months at best away. So that's the end of my monthly China EV market update. If you find this type of research useful, consider subscribing to my channel. Thank you very much for listening. See you next one. Bye.